FBAR is FinCEN Form 114. It's not an income tax form, and it doesn't create tax by itself, but the IRS enforces it, including penalties. On the EA exam, they love this separation. You file the FBAR electronically with FinCEN, not with your Form 1040. So think Treasury reporting, not tax return attachment. Here's the core filing trigger. You file an FBAR if you're a U.S. person and you had either financial interest in or signature authority over at least one foreign financial account. Then apply the dollar test. If the aggregate value of all foreign accounts exceeded $10,000 at any time during the year, you're in. Same threshold for every filing status. Aggregate is where people miss questions. You add up the highest values across all foreign accounts, and you're looking for any point during the year you went over 10,000. It can be for one day. It can be a temporary transfer. Even if the account ends the year at 0, you still file if you cross the line at any time. Quick example. Jose usually keeps about $7,500 in a Mexico account, so no FBAR in prior years. This year, he transfers $19,000 in January to start a vacation home, then withdraws it later and ends at 0. He still files the FBAR because the maximum during the year exceeded $10,000. Income doesn't matter for FBAR. Balance does. Now the age rule, which is oddly strict. There is no minimum age for filing an FBAR. A minor child who meets the same $10,000 aggregate test has an FBAR requirement, even if the child has no income and wouldn't otherwise file a tax return. If the child can't file, a parent or guardian files and signs for the child. Example: Billy is 6. His grandmother opens an Italian savings account and makes him a co-owner, worth about $56,300 in US dollars. Billy must have an FBAR filed, even if he never touches the money. On exam questions, watch for the trap. No income does not mean no FBAR. Deadlines are straightforward but heavily tested. The FBAR is due April 15th following the calendar year being reported, and there's an automatic extension to October 15th. No form, no request. Also, don't assume disaster extensions for income tax returns automatically extend the FBAR. Finally, keep records for 5 years from the FBAR due date. Mateo has a loss from worthless securities. How many years does he have to amend his tax returns in order to take this loss? The choices include 2 years, 3 years, 6 years, or 7 years. Think about it. This is a special statute of limitations question. The correct answer is 7 years. A claim for refund attributable to a loss from worthless securities uses a 7-year period, which is an exception to the normal refund claim rules. A tempting wrong answer is 3 years, because that's the general rule you hear most often, but worthless securities get the longer window. Which of the following taxpayers is required to file a return in 2023? You have Monica, married, filing separate with $1,000 of interest only. Derek, single with $12,500 of wages. Ethan, age 15, dependent with $800 of interest. And Brandon, single with $9,000 wages plus $300 self-employment. Think about the filing thresholds and the special rule for married filing separate. The correct answer is Monica. For married filing separately, the filing requirement generally kicks in at just $5 of gross income, so her $1,000 of interest requires a return. The tempting wrong answer is Brandon, because self-employment income has its own filing trigger, but at $300, he's below the $400 net earnings threshold.